Hey everybody, this is Jim at SP500chart.com. It is a little bit before 8 o'clock Eastern Standard Time, but I'm on the West Coast, working my way down the coast to California. Now, just a little bit south of Los Angeles, and I got a funky internet connection here, so let's see if it works. Before we get started, I'm going to do better than I did yesterday by telling you up front that this video and SP500chart.com are for educational purposes only. Nothing stated in this video or at the website is intended to be used as investment advice. And look, I can draw lines on charts, but you need to draw your own conclusions from your own research. And you need to be making investment decisions that are suitable for your personal financial situation. I'm not a licensed professional. I'm just a guy who draws lines on charts. Well, today, we start off weekly again, but then there's a recovery. So it's kind of like, what's new? For the entire year, when there's been weakness, there has been a recovery. There have been buyers on these dips. The difference is it's not as enthusiastic as it has been. And it appears to me that we may be making a diamond pattern here. Now, the jury's still out on a couple of things in this pattern, but my job is to be as forward looking and as forward thinking as I can about what we might be dealing with. And I'm not, until a pattern confirms, it is totally just conjecture. That's the same as if this had been a head and shoulders pattern or anything else. It's all just make-believe, just guesswork until you get the pattern confirmed. Maybe you'll put it this way. You think you might know the puzzle, but you don't know for sure until Vanna White turns over all the letters. So we're not at that point yet. But what happened today was interesting. We come on down to under 1,500, and then we spend, oh, someone's calling me my hotel room. Hold on. Anyways, I was saying we started the day off with weakness and then spent roughly 2/3 to 3/4 of the day rallying. And what's interesting is if you look at the level that we rallied off of, and you look at the level that we rallied off of back on, well, I would say we rallied off of it. Really, we went down on the 4th and then pretty much gapped up on the 5th. But if you look at the low that occurred before that gap and you draw that line, isn't it interesting? That is exactly parallel to the last two peaks. Okay? Now, just for jollies, since we don't have all of our data points for this pattern yet, and it may not even be a diamond pattern, if we take this line and make a parallel copy of it, then this is where it is. So I went ahead and did that. Even though this line does not go over the top, any two tops, I mean, I guess you could say it kind of lines up with these three if you average it out a little bit. Yeah, let's leave that there. So basically what I think we're looking at is two sets of roughly parallel lines, and that's what defines a lot of diamond patterns. So if we back off from this and we look at it on an hourly chart, come on, this is not a real good internet connection. Come to daddy. There we go. You can see we were up, and now we're sideways. The question is, are we going sideways to consolidate? Or are we going sideways, are we going sideways to consolidate, then form a continuation pattern? Or are we going sideways to consolidate to form a reversal pattern? All I can tell you is that diamond patterns I've seen these go either way, but where we are right now in the chart, I still think it should be a reversal. I think the odds should favor that. That that's all I can say. If we do go down, if we do go up from here, then the good news is we've got a line that'll give us a hint right here. If the S&P can get can break out over this line, then boy howdy, let's go on. Let's head on up to the 1520s. But then we also have this lower line. So if this line breaks, then this pattern is likely heading down. Now, I said back in the weekly review, I'll take it back. Today is Thursday, isn't it? Good grief, where's the week gone? This was actually in Monday's video. When we broke down underneath this red line, I made mention of the fact that that was not a technically significant break. It was a break, and it looked like a sign of weakness. So I would take that as still a shot across the bow. Now, the S&P was able to rally back above that red line and stay there for the vast majority of 2 days. But today, it just gave it up. And this looks more like a break. So guys, that is the video for February 7th, 2013. I don't want to speak too definitively here, but right now, it's sort of looking like this is a diamond pattern. And if it breaks to the upside, then 1520s. If it breaks to the downside, we've got a number of areas where we might get some support. But if it breaks to the downside, it should produce a move equal to the height of the pattern. And that would be roughly, without me drawing, 1495, roughly 16, 18 points. It's not a real big pattern. So it's not like we can expect huge things out of this, but it still is worth keeping an eye on, because sometimes these small patterns create little turns that end up being significant in a much larger pattern. So I think it's probably a good idea to keep an eye on this line and this line. So guys, that is the video for today, and I appreciate you taking time out of your day to watch this. And I wanted to let you know I'll be back in town. We'll do a more thorough version over the weekend for the weekly review. Thanks.